And obviously one of the most defensible deductions. I mean, if you have to pay a lot of your money to support your state and local government, it seems to me your ability to pay federal taxes is somewhat reduced. But they think it's better people should pay taxes on the taxes they pay. So they think that's going to be simpler, but they're not done yet. There are a couple of deductions they want to keep: mortgage interest and charitable donations. Humorous that if you give the money away to charity because you feel like it, you can deduct it, but if they make you give it away to the state and local government, you can't. But that was their thinking. But right now, there's about 41 million people in this country, tax returns that itemize deductions. Everybody else takes the standard deduction because it's bigger, which is, that's better than itemizing for most people. Well, they start bragging in their report that they're going to raise the number of people who itemize mortgage interest to 57 million. 16 more million people that itemize anything now. And they want to do the same thing with charitable. Everybody could itemize it. So when you figure this out, right now we have 40 million people itemizing. Under their plan, 60 million people would itemize, which is half again more than do now. Now, in my humble opinion, any plan that raises the number of itemizers by 50% probably can't be called simplification. They don't seem to get the idea of why we have a standard deduction. We give the people a standard amount. If you have itemized deductions less than that, you get the bigger one, which is nice. Well, they want everybody to have to keep track of mortgage interest, which is not that hard, and charitable donations, which is, and one of the most complicated ones to keep track of. Then they get rolling. Now that they've figured out simplification means complexification, let's get moving here. So they got new rules for taxing, or actually not taxing, dividends and capital gains. They've got new tax-free savings accounts on top of the ones we have now. Not to keep everything we've got, add new ones. And they have a corporate reform plan that would make it easier for companies to shift their profits for tax purposes offshore. They admit it would make it easier, by the way. This isn't a secret in their report. It's right there on page 323, paragraph 6, if you made it that far. Everything, in other words, that they're talking about in this plan is to shift taxes away from investors, away from corporations, and on to everybody else, and nothing in it has much to do with simplification. Well, some of their proposals did not meet with public favor. Getting rid of deductions for state and local taxes and mortgage interest wasn't something the public's been crying for. And so the President and the Congress have said they're really not going to do this thing. Well, that's the good news. The bad news is that Congress and the President have said they want to do the worst parts of this thing. So already the chairman of the Ways and Means Committee, this is his last year, which is nice too, but he has announced hearings for a week or two from now on multinational corporations. Oh, good. He's going to crack down on all that tax cheating? No. He wants to adopt the part of this panel's plan that makes it easier for them to move their profits on paper offshore. And he's having a hearing on that. Now, why would he want to do that? Well, some of you have probably been to Capitol Hill, and you know that it's kind of a weird place these days. People believe things that are not true. For instance, according to House Republicans, the United States has the highest corporate taxes in the world. And I think they really believe that. Now, the fact that our corporate taxes are actually the lowest of all the developed countries except for two, one of which is Iceland, and who cares? They don't notice that. In fact, if you take all the developed countries in the world and average their corporate taxes as a share of their economies, it averages out to about 3%. Ours is 1.5%. Half as much as them, and yet we have the highest in the world. Well, 50% of... Maybe they got it backwards. I don't know. Now, one of the reasons our corporate taxes are so low, by the way, is that companies, they report their profits to their shareholders. And that's a big number, usually, except in the case of General Motors. But when they report it to the IRS, they forget some of that stuff. And so on average, corporations only report half of their actual profits on their tax returns, which is one of the reasons we don't collect that much in corporate taxes compared to, let's say, pre-Bush. Now, another thing that the Ways and Means Committee in the House and the House Republican leadership is thinking about are these tax-favored savings accounts. You know, take your typical family that can save $50,000 a year. They would be able to do that tax-free under the tax advisory panel's plan, under something that the Bush administration is pushing and something that is looked on quite favorably by our current leaders in Congress. Now, you think they figure they've gone far enough. You know, right now, we did a little report on this a couple years ago where we calculated the taxes on investment income, like dividends and capital gains and so forth, and we compared it to the taxes on wages. Now, you'd think in a normal tax system, investment income would be taxed more because the rich people have all of it, and we still have sort of progressive rates. In fact, the average rate on investment income is half the rate, less than half the rate that's paid on wages. So our Congress says, can't we make that gap a little bit wider? Well, that's where they're headed. What ought we to be doing? Well, you know, if you ask the average person who ought to have a vote in this, what's wrong with the tax system, they'd tell you it's unfair, it's too complicated, and the reason is it has too many loopholes for big corporations and wealthy people. You ask that to most people, that's what they'd say, and most people are right. And we, you know, our side, politically, has to make it clear to people we agree with them. We ought to be closing down these hundreds of billions of dollars in loopholes that go to the favored few. We need to go after this enormous growth in tax sheltering, where rich people just thumb their nose at the Internal Revenue Service, move their money to the Cayman Islands, and the big corporations are doing the same thing, and don't get taxed on it. In other words, our goal ought to be, I think, that we want to tax people, especially the wealthy people and the big corporations, on what they really make, not something their accountants made up as a figment of their imagination. Were we to do that, and we have done it in the past, why, we could balance the budget. We could pay for the public services our country needs. And we could stop treating ordinary Americans as tax chumps. So, that's my recommendation. And that's my talk. Thank you.